Hey, it's DPerry, and I am a realtor with property consultants in Bucktown. And today on Logan Square and Westtown Homes Live, I'm going to share with you a report entitled How to Make an Offer Like a Boss. So let's get right to it. All right, so this report is from House Logic and made possible by realtors. So, how to make an offer like a boss, 10 money and time saving steps that can help you to craft a winning bid. The offer. Cinematically speaking, this is the iconic moment. We'd forgive you if you imagine, say, putting a hand on your agent's shoulder and whispering, in your best Vito Corleone, that you're going to make them an offer they can't refuse. In reality, it's not that simple or dramatic. Your offer marks the beginning of a back and forth between you and the seller, typically with real estate agents advising you. Now, the more intentional you are about your offer, the better your chances of making a successful bid. Follow these 10 steps and you'll be well prepared. That's a true story. The Godfather again. We couldn't resist. Number one, know your limits. Your agent will help you craft a winning offer. You can trust your agent's advice on price contingencies and other terms of the deal. It's a mutually beneficial relationship. The more collaborative you are with your agent, the more quickly you'll be able to move. But ultimately, it's you who decides what the offer will be, and you who knows what your financial and lifestyle limits are. Buying a home means mixing strong emotions with business savvy, so now is also a good time to reflect on your must. Have a top limit to your offer price because you're also saving for retirement and you probably love beach vacations, right? So stick to it. Want a vegetable garden or to paint your home's exterior purple? Make sure your homeowners association rules permit it. Besides, reading HOA rules, find out how much the HOA has in reserves to cover common area repairs. You don't want to be slapped unexpectedly with a special assessment. Want a dog-friendly community? Make sure there are no pet weight limits or preventing you from cohabiting with your extra-large canine best friend. Number two, learn to speak contract. Essentially, an offer is a contract. The documents and wording vary across the country. In the spirit of due diligence, take time to review sample offer forms before you found a house. The article recommends, checking out lawdepot.com, but typically your real estate agent has the common forms and contracts and whatnot that'll be used. And if you're high maintenance, a real estate attorney can explain the documents to you so you're familiar with their vocabulary when you're ready to pull the trigger on an offer with your agent. Your agent will have offer forms for your state. Number three, set your price. Homes always have a listing price. Think of it as the seller's opening bid in your negotiation to buy a home. As the buyer, your offer will include an offer price. This is the first thing home sellers look at when they receive a bid. Your agent will help you determine whether the seller's listing price is fair by running comps or comparables, a process that involves comparing the house you're bidding on to similar properties that recently sold in the neighborhood. Now, several factors can also affect your bargaining position and offer price. For example, if the home has been sitting on the market for a while, or you're in a buyer's market where supply exceeds demand, the seller may be willing to accept an offer that's below the list price. Or if the seller has already received another offer on the home, that may impact the price you're willing to offer. Your agent will help you understand the context here. Number four, figure out your down payment. To get a mortgage, you have to make a down payment on your loan. For conventional loans, as opposed to government loans, making a 20% down payment enables borrowers to avoid having to pay private mortgage insurance, or PMI, a monthly premium that protects the lender in case the borrower defaults on the loan. But 20% isn't always feasible or even necessary. In fact, the median down payment was 10% in 2017, according to the National Association of Realtors. Your lender will help you determine what's the best down payment amount for your finances. Now, depending on the type of loan you get, you may be able to put down as little as 0% on your mortgage. You might also qualify for one or more of the 2,400 down payment assistance programs nationwide. Many of them make funds available to households earning as much as 175% of area median income. In other words, middle-income households, and the savings can be substantial. Home buyers who use down payment assistance programs save an average of $17,766 over the life of their loan, according to real estate resource RealtyTrack. Find out more about down payment assistance programs in your state. You can use an online mortgage calculator to see how different down payments would affect your mortgage premiums and how much you'll pay in interest. And by the way, I'll have links to the full article with all the other links and mortgage calculators in the show notes. Number 5, show the seller you're serious. Make a deposit. An earnest money deposit, short for or an EMD, short for earnest money deposit, is the sum of money you put down as evidence to the seller that you're serious about buying the house. Now, if the seller accepts your offer, the earnest money will go towards your down payment at closing. However, if you try to back out of the deal, you might have to forfeit the cash to the seller. A standard EMD is 1 to 3% of the sales price of the home. So, that would be $2,000 to $6,000 on a $200,000 loan. But depending on how hot the market is where you live, you may want to put down more earnest money to compete with other offers. Now, in Illinois, typically the selling agent's office, in other words, the listing agent's office, holds the earnest money. In some other states, the title company is responsible for holding earnest money in an escrow account. In the event the deal falls through, the title company will disperse the funds appropriately based on the terms of the sales contract. Title companies also check for defects on liens on a seller's title just to make sure it can be transferred cleanly to you. Number 6, review the contingency plans. Most real estate offers include contingencies, provisions that must be met before the transaction can go through, or the buyer is entitled to walk away from the deal with their EMD. For example, if an offer says the contract is contingent upon a home inspection, the buyer has a set number of days after the offer to be accepted to do an inspection of the property with a licensed or certified home inspector. If something is wrong with the house, the buyer can request the seller to make repairs. But most repairs are negotiable. The seller may agree to some but say no to others. Or the seller can offer a price reduction or a credit at closing based on the cost of the repair. This is where your real estate agent can offer real value and counsel on what you should ask the seller to fix. Just remember, keep your eye on the big picture. If you and the seller are bickering over a $500 repair to the hardwood floors, keep in mind that that's a drop in the bucket in relationship to the size of the bid. In addition to the aforementioned home inspection contingency, other common contingencies include a financing contingency, which gives home buyers a specified amount of time to get a loan that will cover the mortgage, an appraisal contingency, where a third-party appraiser hired by the lender evaluates the fair market value of the home to ensure the home is worth enough money to serve as collateral for the value of the mortgage, a clear title contingency, where the buyer's title company verifies that the seller is the sole owner of the property and can legally convey ownership to the buyer, a home sale contingency, where the transaction is dependent on the sale of the buyer's current home or the seller's current home. Although contingencies can offer protection to buyers, they can also make offers less appealing to the seller because they give buyers legal ways to back out of the sale without any financial repercussions. So if you're going up against multiple offers, making an offer with fewer contingencies can potentially give you an edge over the competition. In other words, a chill offer is an attractive offer. But keep in mind, you have to be comfortable with the risks that come with this strategy. If you don't have a financing contingency, for example, and you can't get a mortgage, you'd likely lose your earnest money deposit since you're on the hook, an outcome that's decidedly unchill for you. Number 7, read the fine print about the property. The sales contract states key information about the property, such as the address, tax ID, and the types of utilities, public water or private well, gas or electric heating, and so on. It also indicates a section that specifies what personal property and fixtures the seller agrees to leave behind, like appliances, lighting fixtures, and window shades. The seller provides prospective buyers with a list of these items before they submit an offer. This can be another area of negotiation. Carefully review the property description Also helps you to know, for example, if the seller plans to take that unattached kitchen island with them when they move. Stranger things have happened. And number 8, make a date to settle. The sales contract you submit to the seller must include a proposed settlement date, which confirms when the transaction will be finalized. The clock starts as soon as the purchase agreement is signed. If you don't close on time, the party that's responsible for the delay may have to pay the other party compensation in the form of penalty interest at the predetermined rate. A 30 to 60 day settlement period is common because it gives the typical home buyer time to complete a title search and obtain mortgage approval, but settlement periods can vary. Some sellers, for example, prefer a longer period so that they have more time to move or look for their next house. Being flexible with respect to the closing date could give you more negotiating power in another area of the deal. Now, in my marketplace in Chicagoland, typically a conventional loan takes about 30 days. FHA and VA will take about 45 days. Now, one thing that's the same no matter where you live is that you'll have a 3-day period prior to settlement to review the closing disclosure, or CD, a 5-page form that states your final loan terms and closing costs. Once the sales contract is signed, the parties can change the settlement date if they both sign an addendum specifying the new day. Number 9. Now, this isn't something that I've used, but it's an interesting idea, and who knows, might give you a leg up in a multiple offer situation. Number 9, write a fan letter to the seller. Want to make a truly compelling offer? Pull on the seller's heartstrings by attaching a personal letter to the bid documents. Tell a compelling story about your family and your connection to the area. Get deep about your roots. Also, since flattery can go a long way, compliment the seller on how their kitchen renovation looks, apartment therapy worthy. For example, or instance, on how the succulents in their landscaping remind you of a resort in Palm Springs. Your agent can help you gather background on the sellers. For example, are they crazy about their Labradoodle like you are about yours? Did they run a small business from the home like you're dreaming of doing? And you should, of course, refer to information you gleaned during the open house or private showing. Use this intel to write a message that really speaks to the seller, and it may very well seal the deal. Again, haven't done that, but who knows? Might help. Number 10, brace yourself for a counteroffer. If you're making a lowball bid or going up against multiple offers, the seller may decide to make you a counteroffer, a purchase agreement with new terms, such as a higher sales price or fewer contingencies. At that point, it's up to you to accept the new contract. Make your own counteroffer to the sellers or walk away. Don't panic. The next part of our guide walks you through the counteroffer process, and it offers strategies to give you more negotiating power. So again, the full article and all the links will be available in the show note. And this is courtesy of House Logic, made possible by Realtors. So I hope you found value in that. If you want to keep your finger on the pulse of real estate in any area in Chicagoland, sign up for Market Snapshot. It does exactly what its name implies. It provides a snapshot of real estate in any area that you choose. How does it work? Well, first of all, it's free, and that's the best part. And you can receive it as frequently or as infrequently as you like, and you can unsubscribe at any time. So how does it work? Again, you get an email. There's a link. You click the link. It takes you to a map. Houses are plotted on the map, and they're color-coded according to their status. Active, under contract, closed, canceled, etc. You can drill down into the houses. You can get information on room dimensions, flooring. You can also get detailed information on schools. If you have school-age children, you'll want to know how close it is to the school, what the student-teacher ratio is, whether or not there's a score for that school. You can also get information on shops, restaurants, parks. You can drill down. You can see menus, pictures, get reviews. It's outstanding. So go ahead and sign up now. That link you see on the screen is also in the show notes. Click that link, that's live, and you can sign up for Market Snapshot. If you have any questions about real estate, call me, Doug Perry, at 312-572-9801, or email me at dperry@propertyconsultants.com. I'd love to talk to you. I'd like to meet you even better.